Hello everyone, hope you're doing alright. Welcome back to this new video. We are going to talk about draw on liquidity. I'm very excited to talk about this topic. I think it will help a lot of you. So let's get right into it. This is about 75% of the work I do to get to a draw on liquidity. It's a very simple, easy step-by-step process, and my mentorship can back me up in this. This is one of the methods I use to get to a very highly accurate draw on liquidity. And like I said, it's a very simple step-by-step process because I'm a big believer of you don't need IPTA data ranges. You don't need to know a lot. You don't need to have all these fancy complex concepts to get to a draw on liquidity. In my opinion, draw on liquidity is overcomplicated by a lot, and in trading it's very important to keep things simple. We will be going over the higher time frame right here. Just a quick little tip, the same that we are going to do right here on the higher time frame applies to the lower time frame as well, but let's not dive into that just yet. We are going to go over the higher time frame, like I said. Why? Because the higher time frame is the most important time frame for me. So that's everything from the 4 hour and above. I get a lot of questions on Twitter, on Instagram of people that tell me the 2022 model does not work. And then the first thing I ask them is, which time frames are you using? A lot of the times I get a response, the highest time frame I go is the 1 hour. And well, there's your answer. That's why the 2022 model does not work. So I always preach a higher time frame is very, very important to make things very simple for yourself. Of course, that doesn't mean it's impossible to trade without a higher time frame, but if you are struggling, etc., and you're not using the higher time frame, then that might be the solution to you. Institutions are trading off of the 4 hour and above, so everything on the higher time frame. Then why would you not look at the higher time frame? That doesn't make any sense. You are claiming to trade smart money concepts. You are trading like the banks, but you're not trading on the same time frames as the banks. That doesn't make sense, right? So again, if the institutions and the banks are placing their orders from the 4 hour and above, then why not use these time frames for your own benefit? Now, and then it's a matter of asking yourself, are you too lazy? Do you think it's too much work? Well, that's why I have this video. This video is exactly that. You probably only need this video and you could make a lot of money. And I'm not even joking. If you fully grasp this video, you can make a lot of money and you don't need anything else. So I'm not trying to make this too long. Let's get right into it. And since it's so simple, I don't have to make it this long and I don't have to make a 3-hour video of how to get to a draw on liquidity, because getting to a draw on liquidity is a very simple, easy step. All right, let's dive right into it. Now, let me just use the replay tool. I saw some requests of using the replay tool as well. So don't worry, I am listening to you for sure. You've seen me apply this before in my Telegram. If you are not in my Telegram yet, I would highly suggest it. That's where I post my most advanced stuff for absolutely free. And they go hand in hand with my YouTube videos. So there's a link in the description with my free Telegram. So do check that out if you are interested. You might have seen my tweet on this subject as well. And I placed a tweet, I'll pop it right here in the screen. And it says, draw on liquidity simplified. And the only thing you need to know is, if we are going higher, where are we likely going higher from? That's the major question I ask myself if I'm expecting bullish prices. Now, right here, we are bearish. So here I would still ask myself, if we are going lower, where are we likely going lower from? Well, we have this order block right here, this huge order block. And right now it's still rejecting price. Now, if we are going higher, where are we likely going higher from? Well, I saw this order block, this fair value gap. Here below we have another fair value gap and another order block that I do quite like. But for now, price is still bearish. So I'm keeping that in mind, that we are most likely going to disrespect this order block. If we respect this order block, then we could see higher prices potentially. All right, now we push higher. We are failing to take out this low. Now, if we are going higher, where are we likely going higher from? Well, we have this fair value gap right here and this breaker, a key to understanding is to understand the PD array matrix. And understanding the PD array matrix is not that difficult. And you can check out the video I made on the first line of defense, aka the breakaway gap, that will go hand in hand with these videos. And please, if you understand the market structure video, the first line of defense video, and this video, that's literally all you need to become successful and to get to draw on liquidity. That's literally all you need. You don't need fancy concepts or anything or complex concepts. You don't need it. It might be nice to have it, but are you here to make money or to use stupidly complex concepts because they fill your ego? So again, if we are going higher, where are we likely going higher from? Well, we have this breaker right here and this fair value gap. Let me remove this line right here. All right, now we have a new line of defense. Why? Well, we broke above this breaker right here, and this is now a breaker. So if we are going higher, where are we likely going higher from? Well, I would like to see the first line of defense hold. So I would like to see prices go higher from here. Now, notice how I don't go in here and I think, all right, we might trade to this, might trade to here. No, I'm only looking at nearby price action right now. Very easy, because I only look, are we going higher? All right, if we are going higher, where are we likely going higher from? Well, likely this breaker. All right, then next thing, my draw on liquidity is obviously on the buy side. So what could we target? Well, possibly a high right here and maybe even this high right here with some fair value gaps right here. But that's the least important thing for me to do. All I care about is if we are going higher, where are we likely going higher from? That's all I care about. Just figure out for yourself and study for yourself how strong this is. All you need to do now is to get in sync with price. And that's it. That's it. That's the only thing you need to do to make money here. The only thing. It's literally that simple. Yes, it's that simple to make a lot of money in this game. Pretty crazy, right? So you don't need to overcomplicate things. It's so simple. Literally, I could tell my 4-year-old cousin to trade for me and he could, because it's laid out in such a simple step-by-step process. Now, of course, some things like the PD array matrix, he doesn't know the PD array matrix. But again, I'm just trying to get my point across. It's a very simple step-by-step process of doing things. And my major point right here is you don't need to know a lot or to have a lot of fancy concepts to make money here. And that's a false belief. That's the biggest false belief in this industry. That you need to know how an algorithm works, how this works to make money. Absolute bullshit. You don't need to know that to make money. So let's stay on the topic right here and let's continue with the draw on liquidity. So if we are going higher, where are we likely going higher from? Well, this breaker, I would love to see this breaker hold. Now you, for yourself, study this. I will not go over this in this video, but you can set invalidation levels. So what are invalidation levels? Now, I've done a study on this in my free Telegram again, and an invalidation level is a level that you set. And if we disrespect that level, then you can possibly start to switch your bias and switch your draw on liquidity because price is not agreeing with you anymore. So if we are going higher, where are we likely going higher from? Well, this breaker. And if we disrespect this breaker, then I'm going to ask the question, if we are going lower, where are we likely going lower from? And if we disrespect that level, then I'm going to ask the same question, if we are going higher, where are we likely going higher from? It's a very easy, simple step-by-step process. Now, the thing is, a lot of people with draw on liquidity, they go like this. All right, if price is coming here, and this is the weekly, keep in mind, this is years ago. I don't care what happened right here. I just don't care. I only need nearby price action right here to tell me what the draw on liquidity is. That's it. I don't need to know a lot. And this is what a lot of people do. They get in price action and they think, all right, we swept buy side liquidity here. We're now sweeping sell side liquidity here. We respected this. We are failing to take this out, but there's still liquidity here. And it's on the weekly, it's completely useless. And you don't even need to do this on the lower time frame as well. This is the only thing you need to know. If we are going higher, where are we likely going higher from? And from there you react if our plan fails. Now, and then another mistake I think a lot of people make is they are not sure what the first line of defense is. So the first line of defense in here, the first line of support is this breaker. If this breaker is the first line of support, can we expect price to come all the way back down here and then go higher? It could happen sometimes in an unfruitful market where price is not that accurate, etc. It could for sure happen. But if price is accurate and in a high probability condition, it will not break this breaker to go higher. It will respect this breaker and then go higher. And this is important for you to know. So again, it all leads down to the same question. If we are going higher, where are we likely going higher from? This breaker right here. Perfect. Now, next question. If we are going higher, where are we likely going higher from? Because we've seen we are respecting discount arrays right now. We are respecting this breaker. If we are going higher, where are we likely going higher from? This order block right here. If we are going higher, where are we likely going higher from? Well, this order block right here, we do have some kind of fair value gap, but we could see a new fair value gap created right here. And then we might see it go higher from that. Now, again, same thing. I'm not expecting price to come all the way back down here and then push higher. That's very unrealistic. If price wants to continue higher, then it will likely continue higher from the first line of defense. And that's this order block right here with a potential new fair value gap in the making. All right, right here we have a new fair value gap overlapping with this order block. Remember what we talked about in the breakaway gap video? How can we know this is a breakaway gap? Well, we have a higher fair value gap overlapping with another discount array. So can we expect price to come all the way back down here and then continue higher? Yes, this could happen, but the odds are not in your favor for that to happen if price wants to continue higher. If price wants to go lower, it will likely do that and disrespect this, everything, and then do something like this. And then we can ask the same question over and over. See how this is a very simple step-by-step process to get you to thinking if we are going higher, where are we likely going higher from? From there on, you can build your foundation. And this is literally all you need. Now, if we are going higher, where are we likely going higher from? This order block plus this fair value gap. And I want to see it respect that. Ooh, beautiful rejection away. All right, perfect. We have some new price action to deal with. If we are going higher, where are we likely going higher from? Well, we have this fair value gap right here. We have this new order block right here. I'm taking the body of the order block because it's not overlapping. The highest point of this wick is not overlapping with the fair value gap. So I'm taking the body. Now, if we are going higher, where are we likely going higher from? Well, if we do retrace right here, I'm expecting a retrace into this fair value gap and then we might continue higher. All right, we could see a new fair value gap in the making right here. So we could see it retrace only into this fair value gap and then continue higher because this is our first line of defense. Now, when I do have something like this, some price action like this, I would love to see something overlapping with a fair value gap. So not just the fair value gap on its own. I would love to see something overlapping with the fair value gap. Into the fair value gap, pushing higher a little bit, but it's a little bit struggling. All right, we sting into the lower fair value gap right here. Because we failed to push higher right here, we failed to displace higher, I would love to see this fair value gap hold. And now, what did I say? I would love to have a fair value gap that is overlapping with another discount array. If there are two fair value gaps, coming back to the first line of defense, going back to the breakaway gap video, etc. I think you get the idea. Now, what's overlapping with this fair value gap? This support right here. Now, if we can displace away right here, if we are going higher, where are we likely going higher from? This fair value gap. Now, the invalidation level for me would be this order block right here. If we disrespect this order block, I would expect lower prices. Just removing the lines here to not make it messy. Boom, there's your displacement. Perfect. Now, if we are going higher, where are we likely going higher from? First line of defense, this breaker right here. And we completely disrespect this breaker right here. We are coming lower into this order block. Again, if we ask the question, if we are going lower, where are we likely going lower from? Well, there isn't really an argument to make right now. If we are going lower, where are we likely going lower from? Because I can't see a clear premium array or anything. I still think we could reach up into this fair value gap right here. So if we are going higher, where are we likely going higher from? Well, then we could possibly see this order block hold and push higher and displace higher again. And if we disrespect this order block, then a new premium array might form. And then we could make an argument possibly for if we are going lower, where are we likely going lower from? I'm not forcing sells right here. I'm not trying to call a top. So as you can see, we push higher. Now, if we are going higher, where are we likely going higher from? This order block right here. Let me remove the things again here just to keep it clean. So that order block, I would love to see it hold. All right, we retrace a bit here. We don't get into the order block fully, and that's fine. We already retraced into the order block right here with this wick, because obviously on the daily and on the 4 hour, this is a retracement back into the order block. All right, now if we are going higher, where are we likely going higher from? This order block. And now I'm taking the wick because it's overlapping with a fair value gap right here. So if it does want to retrace, I'm expecting a retracement until here and then a push higher. And we don't retrace at all. We just continue higher. Perfect, no problem. Now, if we are going higher, where are we likely going higher from? Well, we have a new first line of defense, which is this high. If this is overlapping eventually with a fair value gap, this becomes our first line of defense. If it doesn't overlap with a fair value gap, this is our first line of defense. If price wants to continue higher, it will not break these two up candles right here. And ideally, if we do close above this high, we only retrace a little bit and then push higher. And now we have an overlapping fair value gap with the body. So this fair value gap is very lovely, and I would love to see a retrace into this fair value gap and then a push higher. All right, perfect. Now, if we are going higher, where are we likely going higher from? Well, we have this new order block with a fair value gap right here. Perfect. If we are going higher, where are we likely going higher from? Again, same thing, this order block right here. We come back, we retrace into the order block. We even have a little fair value gap, but again, what's our first line of defense? This order block, this open of the order block is our first line of defense. Now, can we expect a retracement into this fair value gap? Well, if price wants to go lower, it will likely disrespect this fair value gap. But if we are going higher, I would love to see this order block hold. So this open of the order block will be sensitive. So a retracement all the way back down here is not the ideal thing I would love to see. And especially not what I want to see is a retracement all the way back down here and then continue higher. No, that's not what I would want to see. All right, so if we are going higher, where are we likely going higher from? This open of the order block. Perfect. Now what's next? Well, we have this new order block created right here. If we are going higher, I would love to see it continue higher from right here. And we have this new fair value gap potentially in the making. This is also something to take into account. Fair value gaps on its own without another overlapping discount array or premium array is not something I like. They could still be useful, but it's not something I typically like. And again, that leads me back to the breakaway gap video. Check those out. We come into the fair value gap. We push lower a little bit. We touch the open of the order block. Now here is where I would love to see a displacement away. Now again, I can hear you say, but we do have this fair value gap right here. If we reach down here, would that invalidate the ID? For me, yes, it would invalidate the ID. I would not want to see price come all the way back down here to then continue higher. All right, we displace away. Perfect. Now, if we are going higher, where are we likely going higher from? This order block right here, and potentially a new fair value gap in the making right here. Now, and this is where I'm going to end things because I think I made it way longer than I expected it to be. Obviously, that's not a bad, because I think there's a lot of insights and a lot of things that will help you to get to a draw liquidity. Again, and I'm telling you this from experience, this is the only thing you need to understand to get to a draw liquidity. Now, for this video to work, you need to do the work on your own, and you need to get into a chart and start looking for this yourself. That will make things click, and that is how you form your own edge. And that's how you become a great profitable trader. Because no matter how much videos you watch, if you are not studying the chart on your own, you will never become great. There is not a single video out there. And of course, these videos can give you inspiration, can give you guidelines, etc. They can give you very easy, simple steps to follow, like my videos. But There is not a single video out there that will make it all click for you and that will make you money or that will make you profitable. No way. Absolute no way. For you to make money, to become profitable, you need to study these things on your own. And I'm sorry, that's likely not the thing you like to hear, but it is the truth. And of course, you can surround yourself with like-minded people, can allow me to guide you into becoming a profitable trader. And all you have to do is follow my steps. And that's what my mentorship is for. So if you are interested in that, then make sure to check it out. And like I said as well, if you are interested in more and advanced free educational stuff, then check out my Telegram and make sure you join the Telegram. So now the only thing for you left to do is I deliberately did not finish this. Why? I want you to study the rest of this price action. Now, this is the 22nd of August 2022. This is the dollar. This is the weekly time frame. So go study the last bit of price action here for yourself, and that will help you a lot. Now, you can always send me the markups in DM or anything, and I'll take a look. All right, I hope this was insightful. I hope it helped some of you. Again, keep things simple. You don't need a lot of concepts. You don't need to make them super complex to get to draw liquidity and to make money. Trading can be very simple and it's supposed to be simple. Thank you all. I hope this was insightful. If you do have questions, let me know and I'll see you at the next one. Thank you.